All right. Good morning, everybody. More jobs data today. We're going to be looking at the ADP report. Fitch did a credit rating reduction. So in the eyes of the world, the United States is just a little less trustworthy in paying its bills or to be a creditor. In the grand scheme of things, it's not a big deal. And when they looked back at the last time there was a downgrade, it was from the S&P. There was a short sell-off at first, and then counterintuitively, the markets rallied um, strongly off of that. So something to consider is, in the short term, this might give a gut punch and maybe pull the market back a little bit. But the dominant thesis is still long to the upside. In fact, yesterday or last evening, I was going through my own normal routine, and one of the things that I like to do is see what David Keller is talking about over at Stock Charts. The guy is crazy smart. He's always got a great show. And he had a guest on who was talking about how we are primed for this mega move to the upside. And of course, since that goes contrary to what I see in the near term, I had to watch that video, and it turns out they were looking a little farther down the road than I was, using 10 years of data, back testing on the NASDAQ. But when the NASDAQ gets overextended above the 200 by a certain percentage point, it really dominates, right? It's like the sweet spot for the NASDAQ is to be in that overbought state, highly extended past the 200-day moving average. And we're getting into that right now. So yeah, if you did watch their video, or if you want to go watch it, you can't miss it. It's David Keller at Stock Charts yesterday. In the short term, they're saying there's very likely going to be a pullback, which is definitely what I'm looking at. But in the bigger picture, it's just crazy bullish and a crazy signal to the upside. Something to consider, right? Today, however, we have to consider the fact that we needed this. We needed something. All day yesterday, bonds really needed to be defended, right? We were at this key inflection point. It was really crazy important. And the 10-year was just going crazy, higher, higher, higher. Something had to shut that thing down. Everything needed to flip around. We needed bonds to come up, needed yields to come down. However they get it done, right? You got the PPT, plunge protection team. You got somebody, anywhere. They don't have to go out and buy things. Remember, all they got to do is come out and say things. So who got to be the bad guy? Fitch. Fitch comes out, downgrades the US, and now what happens? Bonds went up, yields went down. Hey, gee, isn't that exactly what we needed? Yup. Amazing. Imagine that. So now is it going to stick, right? That's kind of the big deal, because they defended it back in October, and there's been multiple times in the last 36 months where we've kind of put that phrase out that, man, we're at this critical point. We got to see these bonds come up or it's going to be really bad. And something inevitably comes along and poof, dun, da, 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 bonds are up. Imagine that. Tasty Trades or Tasty Live, what were they doing in their live stream yesterday? Trading bonds. Why? Because they wanted bonds to go up. They thought bonds were going to go up. They knew bonds needed to go up. So what they do? Traded bonds. Kind of get the point? Yeah. Imagine that. Today, 8:15 and 10:30. Those numbers are usually right here within the forecast. So you can see what the anticipated number is versus what the previous number was. And then when the data comes out, you can obviously see what it is. The anticipated impact, if we come over and take a look for today, it's bright, dark orange. There's 3 tiers: mild, medium, and hot. Well, it's gonna be a hot one, right? Now, whether or not the markets have anticipated that it's going to be significant or not is a big deal. Revisions are always important. They might put out a headline number and then quietly in the background change that number to something else that maybe isn't so favorable. It's shady as all out, but that's the way it is. It's not anticipated to be overly impactful today. It's not. It's important. Don't get me wrong, and it can move us through the day today. But in the bigger picture, this one data point, nah, it's not gonna matter unless they miss really bad. So you can see the consensus, 189. The last number I heard was about 200, but either way, if their estimate is 189 and we come in at 350, that would be shock, right? They were wildly wrong. If it's 189 and it comes in at 80, there will be shock. They were wildly wrong. Markets don't like to be surprised, and that's where you'll see some of your biggest moves. So if the consensus is 190 and we come in at 190, probably not going to see much of a big move, right? That's a little bit of logic behind it. Looking at what's going on around the world, we got red on the screen, starting the most deeply in Hong Kong. So much for their stimulus, right? And you can follow this through to NEO, BABA, Baidu, JD, PDD, right? All of those China ADRs. So no stimulus boost yet again today. This is giving back everything that it earned or that it had accomplished last week, right? When it got a little bit out of control and was maybe leaning too far forward on its skis. The US has already started to recover the most, which makes sense because the downgrade happened near the end of the day or right at the Globex. So the Asian markets were coming online at 6 and at 7. They were the ones to feel the brunt of that the most. And before they could recover, they closed for the day, right? But we've had all night to recover, and our markets are not exactly flat, but working their way back towards that. $8.15, 8:30, and 10:30. 10:30 is the EIA Petroleum Status Report. It generally comes out every Wednesday at 10:30, which means you can go back and look at the charts for Wednesday at 10:30 on USO and see, what kind of moves happened during that time period. And maybe it's something that you want to trade. It'd be like a short duration thing, right? Maybe a little scalp. A lot of times you're not going to see a move. I think today you will. One of the reasons that I say that is yesterday I was actually trading oil because it was just offering some really great opportunities. So we'll bring up sweet crude here for a moment. Come on. And we had just a beautiful inverse correlation with sweet crude. So yesterday it came up and tagged that Globex level, took a short on that. Just that little bit of play right there. But this thing was running really nice inverse with the S&P, and I was already watching it because I was long in the S&P. So I decided to go ahead and short this while I was at it. That correlation won't last forever, at least not as strongly as it was yesterday. Got to take advantage of it, get it while the getting is good. But that inverse correlation, when this hit that resistance and turned and fell, it was an immediate response out of the S&P, right? So when I say it negatively correlated, it was very tightly correlated, right? Very immediate response, not some gray area, wishy-washy kind of sort of maybe. When we get that report today, if it again comes in and directly affects what's going on in crude or USO, you could see an immediate reaction. I'm not going to guarantee that you're going to, right? Because we never know. But it's very likely that at 10:30, you're going to see that in the S&P. You're going to see it in the NASDAQ. So whether or not you care about oil or want to trade the oil report, if you're a futures trader or trading options, SPY, the Qs, IWM, You might want to pay attention to that oil report today. Yeah, I know, who cares, right? Just get to the ES. So really nice recovery here. Consider it a gap close, right? I know it's not a gap, you see candles. It's a liquidity draw, gap close. That gap needed to be filled. So very sharp, very fast, immediate, sudden move to the downside. And it spent all that time working its way back up to get the gap closed. And now we've overshot it. The overshot is not so unusual, by the way. Happens frequently when we get a gap close. It should be considered important because we can just overshoot that before coming right back down again. Not that I'm suggesting we're going to come back down. I don't think we will. I think the market took it on the chin, and it's going to rebalance itself at this point, and it's just going to take it in stride. In the grand scheme of things, that credit rating downgrade will be resolved, and the reasoning in the downgrade was kind of arbitrary and a little petty. So, it wasn't like it had new data. It didn't get some new information. Fitch didn't suddenly come across a trove of information that it didn't have before and make a decision. No, it was timed perfectly, a coordinated effort to get bonds up off the ground. Okay, so we do have this gap here. This is a unique gap. It's not like we've never seen it before, but usually the gap comes from the 4 p.m. close and the 9:30 open, right? This is a completely different gap. It's a gap that we normally find on Sunday between Friday and Sunday. If we close Friday at one level, open on Sunday at another level. That's what this kind of gap is. What happens is retail traders can't trade after 4 o'clock. And in fact, some of the brokers won't let you trade after, say, 3:50. Either way, at 4 o'clock, retail's done. They have to sit on the bench. Institutions, however, can continue to trade until 5 o'clock, and then the broker shuts everything down and they rebalance the books between 5 and 6. They open back up at 6 o'clock. We're all on the same page there. So this move happens between 4 and 5 p.m. when institutions continue to trade after the market is closed. A lot of times they don't really trade that much. There might be a small move, a little bit here and there, a couple points, and the gap is very minor and it gets filled right away and nobody cares. Again, that's not what we have today. So this gap is still open. It is not closed yet, and it needs to be taken into consideration because, one, we tried to close the gap and we didn't get it closed. That's a fail. That's important in the bigger picture. When markets try to close a gap and it doesn't close the gap, usually doesn't work out too good for the market, up or down, right? So if we had gapped up and we tried to close it by fading back down and we didn't, it would be crazy bullish and we would just continue to rip to the upside. But we fell down and tried to rise to close that gap. It's very likely that we're going to continue to the downside without getting that gap closed soon. Let's take a moment to come out to the weekly chart and kind of put things into perspective. The red bar that you see is a weekly bar, and we're still inside the bar from the previous week, which I'm just going to move this indicator slightly just so that we can see those wicks. So we are still inside, firmly inside of yesterday's range. It's really important to recognize that this low down here that you're seeing, where the market fell out of bed and then came right back up, where did it stop? Oh, last week's low. Come on, man, you can't make that stuff up. You want to know what a really important pivot is? Open, high, low, and close. Just like that. Did we stop on a dime? No. Did we stop right on the line? Of course not. Liquidity resides on the other side of the pivot. It's not supposed to stop on the line. It's supposed to go through it because liquidity is on the other side. And then it rallied right back up again. So we're still inside of last week's range. At this point, we're building an IX10. We have gone nowhere, right, in the grand scheme of things for 2 weeks. We are below the 50% level, so that's something to keep in mind. We were measuring last week's candle to mark out the 50% mark. Well, we are firmly and 100% below that 50% level. But how we close on the week at this point is going to become really important. This is the 10-period moving average sitting down at 44.64, and we're still not there, right? We're still not there, even in a little bit. Let's move that to an exponential moving average. It'll match up a little better with everything else that we have going on. 44.66. All right, so let's see. We can see the volume is up this morning. Out of all the times that I've been doing the morning briefing, it's been very rare to be able to come in and point to that level of volume at 7:30 in the morning. Okay, so we are elevated significantly. The average, which is the red bar here, shows at around 170. And we came in at 7:30 this morning, sitting at, well, at 8:30 this morning, excuse me, sitting at over 200,000. So we are extreme, but I want to maybe calm your fears a little bit. There's no market maker move sitting up here. And without that market maker move, we know that they're not hedging in the front end. They're not scared enough that they're running in there buying options on things. Because if they were, we would see it. We would see that market maker move on the front side. So it's very extreme. That shows a significant level of volume, but where the volume is will be really important. And we can use something like the TPO profile rather than the volume profile, or at least put the two together to get a better idea of where in this move so far today did all of that volume show up. Say, like when we interacted with the previous week's low and triggered into a bunch of institutional buy orders. Maybe. 10-day, 30-minute volume profile. When we're at the low, we expect to go to the high. When we're at the high, we expect to go to the low. Hey, we're at the low. We are underneath the point of control. The gap is really clear even here. We have a classic B shape, and we really don't have any expectations that this is going to offer any value or insight at this point, right? Things have changed dramatically, and this isn't offering us any perspective on what's happening in the right now. When we use this to continue a narrative or to carry forward the story that we continue to talk about every day, that's a completely different thing, right? That helps us, keeps the flow. But when everything gets broken and you lose a chapter out of the book, this needs time to catch up to what's really going on. So not much help out of that thing today. At the very least, though, you have to be able to recognize that and just put it aside and say, there's no value out of that at this point, and come back to it later. We have a VPOC from yesterday. So now we've got two overhead. You can see the move to the downside here, and looking at where all that volume was, we're not really getting a significant amount of information here, except being able to answer that question. Was there a lot of volume sitting down at this level? And how do we know that? Well, on the TPO, it shows that we really didn't spend a lot of time down here, and yet we had a lot of volume down here. Notice everywhere else, it kind of matches, right? When we're comparing the two, we got a little bit of a price shelf here, and we spent some time there. So it makes sense. We've got the point of control here, the greatest amount of volume, and we have the same point of control there because we spent the greatest amount of time at that location. Makes sense. Again, they're in agreement. More volume here than the time is showing. And then it continues with that. A lot more volume here than the time is showing, and a very large bump of volume here without a large bump of time showing. So when we overlap those two, they should match up fairly well. I mean, that's the whole idea. They should have a very similar shape. So when they don't, it tells us that one side isn't reading. It didn't catch what the other one was doing. So there was a significant level of volume down here. And it didn't take us very long to accumulate it before we went back up. Call that an iceberg, right? You can see it on the dome when we fall down towards that level. So now we still have to get back past through the point of control, and then we have one more area of concern right above that, 45.86, and then we should pretty much be good to go. You know, at least getting back to where we were. We need that gap closed. So one trade today that's going to be pretty much like a layup is if we break through this Globex high, we're going to close that gap. And it's a done deal, right? We just got to we just got to get there first. So if we get there, if you're busy and trading is like your secondary thing, but you got real life and the job getting in the way, set an alert there. If we get up and get through that level, we're going here, right? The thing is, they could defend that level strongly multiple times. So, this area here represents traders that are unfinished business. I just like to say it that way. Unfinished business, meaning if we get back there, people are still going to try to get that business done. And we can see that, right? We came back to it. They got some more work done, but we don't know if they're done yet. So when we come back up to it again, it's very likely going to pull back again, because if they're not done, they're going to continue to work. And it's going to continue to do this until they're done, and then we'll make it through there. So, it's not like we're guaranteed to go back up, break that high, and close that gap. Not yet. We've got a lot of unfinished business to deal with first. Interestingly enough, on the NASDAQ, we ain't even there yet. Okay, but we did get through this area here, which represented the same thing, unfinished business. And we did get that gap closed, that liquidity gap, but not this gap. All right, so the 10-year made it back up to that 4.016 level. And it did finally pull back from there. And we've got this little cluster going on. Notice that it's a bull flag or a bull pennant. It hasn't failed yet, but it is looking really weak. It shouldn't look like that if it was a good, strong, bullish flag or a bullish pennant. It should have a more uniform set closer to that high, right? So while it is indicating compression and it is winding up for another big move, we don't know the direction of that move yet. Since it's intonating that weakness, we could have a bull flag failure. Breaking that low might offer us like a slingshot back to the downside, right? It'd be more of a bungee in reverse, I guess. I don't know. Either way, push to the downside. If we get that break, it's very likely going to come with conviction. Now you can measure that, right? Use something like the RSI Laguerre and use the polynomial fractal that built into that thing to gauge the level of gamma within it, or the strength of the move. I know that just all went right over your head, right? Like pure nerd geek speak. It's the difference between throwing a ball to your kid and dropping a ball off the top of a really tall building. When you throw the ball to somebody, you put energy behind it. As the ball moves, it loses energy. Take a big ball, or take a ball and drop it off a big building. as it falls, it picks up energy. It continues to increase in speed until it tops out at velocity, right? So when something is moving, we need to know, hey, is that moving while burning energy off? Or is that moving and gaining energy in the move? Because then when we get to support or resistance, we got a better idea. Is there any energy left in that thing? Or has it accumulated enough energy at this point to break through it like a juggernaut? That makes sense, right? No science required on that one. Just a little bit of maybe X-Men logic. Come on, wake up, guys. It's a good day. US dollar Japan did reject at the 143.5 and pulled back perfectly, sweetly. That was a timely move, right? We had US dollar Japan come right up into the monthly right after the 10-year had come up and hit that quarterly. So rejection here, rejection there, and the dollar did reject along the same time frame, but there was no pivot there. It had already broke through the monthly, and in fact, it's still firmly above. So I'm probably a little behind the curve. I'm gonna have to go out and look at the dollar and see if I'm missing a level, because I don't remember the last time I drew those lines. There could be a new monthly candle. In fact, there is guaranteed to be a new monthly candle because it's a new month. So maybe there was a level in here that I just didn't have drawn. Either way, the dollar did play along with its peers and turn where it was supposed to. So always good when it does what it's supposed to do, right? All of these together was working really nicely yesterday. But again, it was still oil that was giving the best signals for opportunity, or the greatest confirmation for the play. And that is how we're able to size up and go big, right? You get out of that wishy-washy, maybe I don't know state, and put some real money on the line. Hmm. Just a second. All right, so this is the homemade ETF list that I developed yesterday. The idea behind this is on Thinkorswim, we can make our own lists and basically make our own index or our own ETF. So we've got, just kind of put them in some sort of order. Manufacturer is steel. So X Steel, Newmont, they're doing the worst this morning, down 0.5%. Well, you know what? That's not, I shouldn't say that. That's not true. Got to put this thing in a better order here. Let's see. Down the worst this morning is Li Auto, Li, Neo, Nikola, Rivian, Tesla, XPEV, all those EV space. They're getting hit the worst, down 2.5% collectively as a group. They're the worst off this morning. Behind those are the pot stocks, Cron, Tilray, those companies down more than 2.25. Behind that, we've got the China ADRs, JD, PDD, Neo, Baba, Baidu. So the ADRs aren't even as worse off, right, as those EV space. So the China ADRs getting a little bit of hit. Behind that, we got the airlines down 1%, United, Delta. Then we've got the FANGs also down nearly 1%. Communications down 0.75%. Chip makers, even though AMD had such amazing earnings, chips are still down about 0.75%. Then banks, same area. And then we've got the Bitcoin proxies, Riot, Mara, Coin, Hut, Hive, down more than a 0.5%, but less than 3/4. The indexes themselves about a 0.5% into the negative. And notice nothing positive in any of this. None of them are positive. So from a flip point of view, the EV space has the most room to run up if we do, turn back around and start getting bullish again, which I'm of the opinion that we likely will. Just the question becomes how soon, right? We can see the indexes are already starting to recover. Will it be today, or are we going to take advantage of it and continue to, bob around under this low first before maybe finishing it off at the end of the week or next week? So not quite sure, but if we do start to run higher today, I would focus on the things that fell the most, since they have the farthest that they could run before getting back to neutral. Let's go look at BitTO, because that thing can be misleading. Sometimes it won't get pre-market data, but it'll still showing after hours from the night before. But that's not what's going on. We can clearly see it's getting bid up a little bit this morning. So this is more Bitcoin. That's going to go into the idea that Bitcoin proxies, Riot, Mara, Coin, Hive, Hut, those kind of things are going to recover first, or the most. It's got the most room to run. Maybe take this out onto the daily and the weekly. There is a market maker move on that, by the way, so they are hedging in the front end, which makes sense because they fell a lot. This morning, they're up to 1534. They closed at 1516. So here's the close. They gapped up, and they're not quite at this low from back here, but if that was going to be an island, if it was going to be an island reversal, that's broken, right? You get the gap down, it builds the island, and then it gaps back up. That would be an island reversal, but that's not what we got, right? We gapped down again. So this is going to be really important. If we don't come back up inside this range by the end of the week, I think we're going to go down even more in these Bitcoin proxies. You can see this gap back here that didn't get filled right away, but it eventually did. Just love how this proves that logic. So we closed here, it opened a way down there, rallied up, still couldn't get the gap closed, gapped down again, finally got it closed. So pay attention to the gaps, right? They do come back and bite us more often than not. And speaking of gaps, here on the weekly, we got that gap closed. Where did it turn around? Right after it closed the gap. Come on, man, you can't make that stuff up. I love that. So the gap is closed. Now we need to close this gap. We're looking at 1549. We'll see if we've done that already here in the pre-market. 1548. I was off by a penny. Nope, haven't done it yet. So that's the goal right now, right? Get through this 1542 and get up to 1548. Even better, get above it. So we can see on the weekly how unhealthy this thing is, right? We're under the 10, we're under the 20, and it looks like we're going to get a 10-20 cross on the weekly, that's no good, right? That's a bad deal. So it hasn't happened yet, but at some point it becomes inevitable. And unless they pull a rabbit out of the hat, like they did back here, where it looked like it was inevitable they were going to cross, and the same thing here, it looked like it was a done deal, it was going to cross, and they came in and played save a hoe at the last minute and dialed it back up. So they could still save a hoe again, not quite out of the runnings. And if they do, I mean, we got this really nice TRB setup. The line isn't going to line up really nice with anything, but the visual isn't important. It's the action, right? Same thing here. We had a really nice TRB setup. Even if you couldn't snap a pretty little line onto it, the format was there, the base was there, the breakout and the recovery all in one shot was there. Same thing here. In fact, imagine how crazy bullish it is to close here and open here. If that wasn't bullish enough, then breaking right out and running for it. Come on, man. That's about as clear a picture of bullishness that you could ever find, especially on a weekly. That's a weekly gap. It's also an unfilled weekly gap, right? Just kind of keep that number in mind. And how far did it fall that week? All the way to that gap close. Sounds kind of funny when you tell people that you're studying gaps. They're going to think maybe you're a proctologist or something. Too early? Too soon? Come on, wake up. All right, the Russell is still languishing as well. Hasn't quite managed to pull anything up, but it was worth taking a look. Really want to keep your eye on the totality of what is going on out there, right? Continue to cycle through, look at everything that's moving. Try to find an outlier or a tail. Yesterday it was Netflix. Netflix just broke out and took off running and didn't wait on anybody else for anything. Didn't even wait, right? Didn't care. So it was an outlier, and so was AMD. Now the AMD earnings hadn't happened yet, right? So that was a big breakout and a run even before we got the earnings at the end of the day. Now this morning it's up to 120, which might not sound very great, but considering that the Fitch downgrade and everything else is going on, the fact that they're still up even that much, that's pretty impressive. I'm not going to give any credence to this yet, but they said that during the announcement, AMD came out and said that they are working on the ability to integrate artificial intelligence very similarly to what NVIDIA has been able to do with artificial intelligence and chips. So that's why they got the bump. But that's a bold claim. So I don't know. And everybody's saying they're adding AI. Even Meta has come out with these AI personas to where you can chat with a chat bot that has a different personality, like Abraham Lincoln, for an example. I don't know why you would want a chat bot that sounds like Abraham Lincoln, but hey, if that's, something that you're interested in, they got it, or they're working on it. With these really nice compression levels in NVIDIA, the wedge is kind of clear. Microsoft has this really beautiful setup. So it hasn't triggered yet, but it's where IX10 and the range at this point is crazy tight. So forget the big red candle back here. That was the range of importance, but not anymore. Now it's just the last 3 candles, because that is your IX10 all by itself, and it is really compressed. Well, the market is like anything else in nature. You can't compress it without a release valve. You got to let the pressure off a little bit, or that thing's going to explode. So this is winding up more and more and more pressure, and it's going to go. The question is, well, which direction? I'm still of the mind of being bullish in the fangs, right? But that doesn't mean in the short term with this Fitch rating and everything else that we don't see a little bit of a move to the downside. Microsoft is up this morning. We closed at 336.34. Oh, excuse me, we're down. We closed at 336.34 and we are at 333.80. 80. So we're still inside yesterday's range, but not by very much, right? By a negligible amount. I was at first a little disappointed yesterday when it looked like we were breaking out in Microsoft and we were going to continue that run. I thought, well, that just sucks because this is a great setup and it would be wasted if we made that run at like 10:30 in the morning at that point. And then I got excited again because it sold back off and closed exactly where it needed to close. So we are poised in this thing for an amazing move, especially this morning with a gap down. I like that better than a gap up. So it needs to hold the low. We really don't want to see it get outside of that low. 333.17. Just call it, 333 flat, really. We want to see it hold that low and then start to make a run. Any one of these could be your trigger that we get to the open of yesterday, that we get to the close of yesterday, that we get through the top from yesterday. That would be your final breakout trigger. It will eventually, if we do get this breakout, close the range. It'll get to the top of that zone, 343. And then if it keeps going, we'll get the gap closed up here at 350 and continue to move up to the high at 362. That's the start of a really nice swing, and that's a great setup. I drew the range really narrow for that TRB, but really it comes from this high way up here, right? So if I just steal my line back, put it where it was, it's ready. I don't know that today is going to be the day. I keep thinking we're going to be, we're waiting on Apple first before we get it. And Apple still has tomorrow, right? So if this chops around for one more day, just builds more compression one more day, and then we go, that would time nicely with, a move in Apple. The problem with Apple is the TRB is actually to the downside. Now remember, don't get hung up on how you draw the lines. It's more of the visual, right? We don't really have an IX10 yet. We got to let today go by. I mean, we have one, but it's so big. Who cares, right? That's just too big of a range. What we want to see is it going to hold in this small range, that range? Because at this point, we're inside day and it's a really nice. But we need one more day for that to be IX10. And then we'll have some great compression for the earnings and the really big move that comes behind it. We are down this morning, but a negligible amount. Closed at 195.60 and we're at 194, call it 194.90. So we're down here already. We're outside of the box, which means this is still our zone. And in the bigger picture, 192 to 198 is the real deal, right? That's the real zone. So we got to let it play out, but I like that Microsoft play. There was one other thing I wanted to mention here. I don't remember, so I guess it doesn't matter. Yep, doesn't matter. Okay, so watch the groups, right? You want to see those China ADRs start catching flow, or the EVs start getting flow. Behind that, bring up the semis, keep your eye on the 10-year. And 10:30 today, the crude report. I can't tell you how nice and refreshing it was to be trading yesterday, leaning on something. It happened to be oil, but still, it was good. Take advantage of it while you got it. That's why we got for you guys. Be careful, be safe, watch the clock. 15 minutes, got a report, and I will see you all tomorrow.